Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I am making a rating change here on the S&P 500, changing from bearish to neutral, and that's just today's date. So let's get into it. Well, I don't think this is the bottom. I think there could be a lot of pain ahead. Nothing goes in a straight line, and until I can really identify um, with more certainty the magnitude of this decline and what it might be, I'm going to be a little more trading oriented. So let's get into it. This is a long-term chart of the S&P 500 going back to 1997. And what I want to point out here is as we were hitting higher highs back here into 2000, I was in the markets during all this time. I've seen all these crashes. So you can see as these were hitting higher highs, we were getting lower highs on our relative strength index, flashing a caution sign that while prices were going up, the underlying intensity was waning. And you can see in 2007, this was only like an 11 or 13-month negative divergence, whereas this was a couple of years. Um, and then if you fast forward to where we are now, this is by far the the biggest negative divergence that I've ever seen. And, we're talking about one, two, three, four, five, maybe 5, 6 years in the making. And the thing with negative, so it's been flashing a caution sign that long. The problem with negative divergences is they can go on forever. So, um, anyway, it is something to have in the back of your mind and something to be aware of. So, this suggests that at some point we're going to get a massive correction, or let's just say big. Let's not get too. I'm not somebody that's trying to sell my YouTube channel. I'm trying to give solid advice, but this is, interesting. Let me show you. So now we're just going to go back and we're going to take a look at the last 7, 8 months. And here we go. It looked like we had an ending diagonal. These are found at the end of major market moves. This is on a daily chart, so it's not a major market move. But then it chopped around. It looked like it was forming a head and shoulders top. It didn't do that. I got bearish right here on January 15th on a bearish rainbow convergence with all these moving averages coming through. However, prices did break through. I kept a short on. Here was my resistance, was the prior high, and we challenged that a couple times, but we didn't break it by enough to change my outlook. And you can see that we've had just kind of a straight down decline since then. And a lot of people, a lot of market technicians use a 200 day moving average. I use the 250 exponential moving average. And I don't know, I just find it to be a little bit better, not a big deal. But uh, we're getting oversold. We're certainly not big time oversold, but we are oversold. We're down here around the 250-day exponential moving average. And so I'm just going to pause here. Uh, and I'm expecting a bounce. Tomorrow's a big consumer price index number. What some algos are telling me is that the CPI should come in more tame than expected, showing less um, inflation and what the street was expecting, and maybe that will. You don't know how the market's going to react, but maybe they read into it. The inflation's slowing down. The Fed can start cutting rates. So who knows what'll happen tomorrow? But I think this is just a good time to pause and see what happens. I'm kind of expecting, you know, a week or so of maybe a lift. And once we do get a lift, it'll be dramatic and big because there's so many people shorting the market right now. that once they start covering their shorts and they get caught, they will, that will expedite the market upwards. So, I'm looking for some sort of a maybe 30% of this entire decline, some sort of rally, or if it's really, really weak, it could trade sideways. But I think with short covering and stuff, you should see the market bounce soon. And the point and figure chart, we got a sell signal. It's suggesting 49.51, which is really it gives you a landing area. And that would be right around where our bullish trend line is on our point and figure chart. I like to use point and figure charts because it's the cleanest, less subjective chart that people can draw. It's really supply and demand. O's represent supply when people are selling. X's mean demand when people are buying. So, eventually we probably work our way down here and then we see what happens. But I'm expecting a little bit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if you have a column with 10 O's or 10 X's in it, that's called a pole in point and figure terminology, and it suggests that maybe things are a little bit overcooked. But anyway, uh, I'm going to take my foot off the gas here on the downside. I'm going to go to neutral. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends. Have a great evening and good trading to you tomorrow.